Tuesday morning, you're with us here on a fresh new edition of Bazaar Morning Call. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, good morning.
Morning.
Starting another day quiet, right? Not very much in terms of cues to take off globally. So US equity sold off in the last hour of trade, and you had the Nasdaq, which ended about 1.25% lower. Not very much, but the continuation on the upside was kind of broken. One positive thing, which I think is significant, is oil prices. They got very close to $9,900 very recently. A week ago, they're back at about 92, 93. So despite all of the talk of China reopening, etc., prices fell, which is good news. SGX Nifty, it's moved up in the last 30 minutes or so. It was more or less flat. Now you got about a 60, 65 point start higher, which is about 1/3% in the green. Yesterday, we saw some consolidation. Will we see more of it? That is the question. Guys, good morning.
Hi, morning Prashant, morning Nigel. Morning. And there's that song, right? Nothing can stop it. I'm all the way up, right? I feel that way when I look at the markets. I mean, it's been all the way up, and it's what 1% away now from the all-time highs. So a little bit of consolidation, a little bit of pause is something that we're seeing in the last few days. But the Dow was up about 200 points overnight. Down 200 points overnight. So this is the first decline that we've seen in the last 3 days. So maybe a little more of a pause is what our own markets could see. The flows is really the big positive for us. I mean, in November so far, it's been almost 14,000 crores that has been pumped in by foreign investors and almost 1,100 crores in trade yesterday. DIs as well, just a smidge, about 50 odd crores, but buying both from FIIs and DIs. So the money is coming in thick and fast. Also, the macro data is improving from an Indian standpoint. Inflation has eased. CPI eased to a 3-month low of 6.77%. And, we had positive commentary from the RBI as well. So give and take everything, the macros, the micros are all looking good. I guess it's just buying time today. The SGX Nifty, of course, is indicating that we could put on some more weight, but just a matter of time before we get to new highs.
Some indication, right, Sonia, last couple of days that maybe things are slowing down a little bit, especially broader markets. Mid-cap, small caps are not participating that much. And I think the breadth of the market has also suffered. So I think maybe, all of that telling you that, and earnings are, by the way, behind us. And we'll talk more about that in just a bit. So global cues are lackluster. You've got in the last hour, for no particular reason, by the way, the US markets came off. No real news flow trigger, but I mean, the market ended down about 1.25%. The S&P was down a little less. Commentary coming in from Fed officials. So this is Fed's Brainerd, who's the vice chairman of the Federal Reserve, saying, and I quote, "Probably it'll be appropriate soon to move to a slower pace of increase." That is good news. It's dovish, right? But then, just on Sunday, you had comments from Fed's Waller, who's the Fed governor, who said that FOMC, and I quote, "still got a ways to go." There are 13 more speakers lined up. After what we heard last night and on Sunday, there are 13 more to go this week. I think we had a guest, I don't remember who said the FOMC could also be called the Federal Open Mouth Committee, So many people constantly talking, but the fact is that this is the most important aspect for the market, which is crucial. What is the terminal rate? How high? For how long? So it doesn't matter how many people speak. Not all are equally important, but the senior-most members, markets will pay attention to. Inflation here has also fallen, and I think that is important. The numbers came through yesterday. We had the hint from the RBI governor himself, and we played sound bites this time yesterday. So the headline inflation number is coming at about 6.8% compared to 7.4%. These are year-on-year increases that we're talking about. But, if you exclude vegetable inflation, if you look at food inflation, ex-vegetable, it is in line. If you look at core inflation, ex-food and fuel, that is also in line. So in the headline, there is some relief, but on an overall basis, I mean, you could still nitpick. But in any case, what matters is, for policy, what matters is headline inflation coming off into the RBI band of between 2 and 6%. So that is one thing. I already mentioned oil, which has fallen, right? Oil is no longer at 99, which it was last week. Last Monday, we were at 99, knocking at 100. We're at 92. In terms of strategy here, I would say don't be in a hurry to pile on and look at lower levels to buy. Maybe the market comes back into that congestion zone we've been talking about in the Nifty, which is 18,100, 18,250 or so. If you get prices around those levels, perhaps look to buy. On the upside, I think the Jan 22 high on the Nifty, which is 18,350, which is where the market exactly left off day before yesterday, and we kind of close slightly under it, I think that will be an indication that maybe there is more to come. ASX is indicating we'll start above it, but should you chase it? I would say no. Wait it out, give it some time with the way the market's been behaving over the last couple of days. Nigel, what are you watching?
Well, some near-term consolidation will not hurt anyone, right? After the kind of run that we have seen, the US markets did come off, today. And in fact, if you're looking at big earnings, you got a big day of earnings out there because of commentary. Walmart and Home Depot, both of them will come out with a set of numbers in the next few days. In the US markets, we'll get plenty of retailers as well that will be reporting their numbers. So that's going to be one factor, not just the results, but the commentary as well will be tracked. In terms of our own markets, the cash market, the flows continue. The net institution buy number of around 1,100 crores, that's positive. Now, the live indicator you have is the Nifty futures premium. That came down to around 50 from around 70. Well, you were wondering whether or not there were short positions that were created. That wasn't the case. The Nifty open interest did see some unwinding. The Nifty bank open interest as well did see some unwinding. So there was unwinding of long positions, what we saw. And that perfectly ties in with what the FIs did in the F&O market. They unwound close to around 5,000 long contracts and they added some mild shorts. Net-net, they continue to remain net long on the index. However, on the option side, they bought some calls. What's telling you that maybe that 18,500, 18,550 will be a near-term resistance is yesterday the FIs wrote 60,000 call contracts. That's a large number in terms of call writing. And the options data as well, if you plug it in, it's fitting in perfectly. 18,400, 18,450 calls, both of them very active yesterday, 50 lakh shares getting added there. The sense you get is there's writing at those levels. On the downside, the 18,000 put, it has the highest open interest, on the put side. It has close to around 75 lakh shares odd. So you're expecting that level to hold out. The broad range you have is 18,000 on the downside, maybe 18,050, 18,100 odd. And on the upside, I think there'll be a bigger fight from the bears to save this 18,550 odd mark going by the options data. Just in the near term, we're headed to all-time highs, but maybe some bit of consolidation in the near term. SGX Nifty suggesting we're going to get closer to that mark. Sonia, what else?
Okay, closer to the peak, right?
Yeah.
Edging closer and closer. I was just reading a report that Warren Buffett's Berkshire Hathaway has revealed in the last quarter that it's built a $4 billion stake in Taiwan Semiconductor. So,
TSMC,
Yes, TSMC. And we were talking about this, right, as to how the worst of the semiconductor shortage perhaps is behind, and now he's taken a bet well in advance in the last quarter itself.
Actually, he's one of the big global investors. Actually, he's not much of a glable investor. He says, well, I want to bet on American companies. But if you remember the battery maker, BYD, I think there was Charlie Munger who took I don't know if it was Berkshire or in personal capacity, but that was a large position.
Yes.
He's bought oil companies around the world. Yeah. Apple, of course,
he holds for a long time.
And now, of course, as you said, Taiwan Semiconductor as well. The other thing is this news flow around layoffs, right, that we're hearing. Amazon 10,000. We've heard from Meta. Twitter, of course, is a fiasco unfolding.
Yeah.
Microsoft, and I think so many other companies starting to. So we watched this labor market data, right? With the monthly unemployment number, NFP number. So all of this adds up, right, slowly.
Absolutely. And there are going to be so many people without jobs. That's going to have an impact on growth as well, right? On consumption patterns too.
I was just wondering, this labor market data that we get is looking very strong. What data are they looking at?
I think, Nigel, all of this, that number is what, 300,000, 400,000. These are still, these are large layoffs, but 5,000, 7,000, 10,000. But I think it adds up, right? Eventually it adds up. And the way the labor market data is counted is, they ask you whether you are employed, are you looking for a job? You don't raise your hand, you don't get counted. So it's the way the data is also counted, which I think makes a difference.
Okay, well, lots happening in the market, so we're going to discuss that in the next 2.5 hours. First up, we have a comment coming in from Gautam Duggad of Motilal Oswal, who says that the results season has been largely in line with no earnings cut despite all global macro-related headwinds. He says FII and domestic flows have turned positive and FIs have bought 14,000 crores in November so far. He adds that the market movement from here will depend on how global central banks behave. He also says there's very little room left for re-rating as India is trading at 20 times forward earnings. They continue to prefer large-cap banks while metal stocks should be avoided.
Okay, some money market views as well. Bhaskar Panda of HDFC Bank says the rally in stocks and the slide in US yields halted yesterday as reality check sunk in. He says the US Fed official spoke about need to tame inflation. The pace of hikes may become slower. He adds the dollar index rallied, but oil prices have cooled down a bit on China growth worries. He says in India, sudden appreciation of the rupee against the dollar halted as importers started to take advantage of lower spot levels in the dollar INR pair. He expects dollar INR pair to be above 81 to a dollar level and consolidate in a range of between 81 to 81.30 to a dollar.
All right, on the bonds, Bhaskar Panda says Indian bond yields have cooled off even before yesterday's CPI reading was out. He says the CPI reading came out below 7, which means the pace of rate hikes will also be more moderate in India. He expects a 10-year benchmark bond yield to consolidate within a range of 7.25 to 7.35% for the time being.
Well, we have a lot of stock-specific action. We'll get to that in just a bit in our special Top 10 segment. Well, we're looking at ONGC, Biocon, Apollo Tyres. Those are stocks on the back of positive news flow. Well, we have plenty actually in the red today. Balkrishna Industries, IRCTC, NMDC, GMR Infra, CESC, RT Industries, as well as Radico Khaitan. They could be reacting to negative news flow overnight.
Okay, so that's the list of stocks. And a big takeaway this earnings season has been all the companies that are exposed to the global markets. Markets like Europe, China have seen a big hit this time around. More on that in a bit. We'll slip into a quick break. Our list of top stocks lined up in minutes from now. So the SGX Nifty is indicating that the start is going to be well in the green this morning. Let's see if we get to those all-time highs or not. But Sonal is here to tell us how ONGC's numbers look this quarter. Sonal, hi, good morning.
Good morning, Sonia. Well, ONGC's numbers are much better than what the street was working with. If I compare it with the poll, revenues came in at 38,320 crore rupees, which is a 3,000 crore beat if we compare it with the poll. EBITDA also 1,000 crore higher than the poll, coming in at 18,811 crore rupees. Margins at 49% versus estimates of 48.6%. And profits also a big beat there, 12,825 crore rupees. That is on the bottom line. These numbers have declined on a sequential basis because oil prices were lower on a quarter-on-quarter basis, but nevertheless much better than estimates. Net realizations, they were up 33% on a YOY basis versus an expectation of 7% increase. So that's come in as a big surprise. They came in at $94.96 per barrel. So going with green for the stock today. However, important to watch out for crude oil prices. They have been trending lower, and going forward, how windfall taxes really pan out is something which will decide the market moves for ONGC as well.
Okay, all right. Thanks a lot for that, Sonal. Well, Mangalam joins us to tell us about IRCTC. Mangalam, a little bit of a softish quarter?
It is a softish quarter. If you look at it quarter on quarter, it's a slow train. Year on year, it is a fast train. But again, it is led by non-ticketing businesses. So that's impinged on their margins as well. If you just take a look at these numbers quarter on quarter, there's been a 5% dip in revenues as well as EBITDA. The net profit has dipped by about 8% odd. Year on year, there's a growth of 99% on the revenue, understandably because of a low base. And at the same time, the EBITDA has grown just 44%. That indicates margin compression. Why is that? Well, because catering business, which was virtually nothing in the same time last quarter, has grown by almost 400%. And that is the business which is a low margin business for the company. Catering expenses have jumped from 28 crores to around 235 odd crores as well. The high margin business of the company, which is the ticketing business, has been flat quarter on quarter, and year on year as well, there's been just a 13% growth. So nothing really to write home about. The other business that has done well for them is the rail neer business, because if you're eating, you'll obviously get a lot of water as well. 75% jump out there. But these are again low margin businesses which have bounced off low basis. See some red on the stock.
Okay, thanks a lot for that. So see some red on IRCTC, but let's go across to Ekta to find out how Biocon did this quarter. Ekta, over to you.
Well, yes, for Biocon, it was really a mixed performance, you'd have to say, because the revenue was up 26%. Street was anticipating 25% growth, so that wasn't too bad. The margins came in at around 20.3%, and this is lower than expectations, and the profit was lower than expectations as well. Both of these parameters were lower simply because of the R&D expenditure, which has jumped up 65% year on year, and there was a higher tax expense on a year on year basis as well. Segment-wise, one of the key ones is biosimilars, which is 42% of their sales, which was up 34% on a year-on-year basis. So that seemed to have done well. It was up around 2% on a Q-on-Q basis as well. Now, the big news with regards to Biocon is that the transaction to acquire Viatris's global biosimilar business is expected to conclude soon, and Biocon has secured $1.2 billion of debt. The balance is going to be funded by $650 million by Biocon, and $150 million from Serum. So Serum will be investing an additional $150 million in Biocon Biologics. So that's what we'll need to find out more on. The remaining will be from Biocon, $230 million from existing reserves and $400 million from mezzanine financing. More details on that. That's probably why I would go with the green on Biocon, simply because they're getting more funding from Serum. But overall, it was a mixed performance when it came to their numbers. Call is at 9 a.m. today.
Okay, all right. Thanks a lot for that, Ekta. Well, NMDC, the stock should react negatively because the numbers were a miss. It was a top-down miss, actually. Big miss on the top line. The EBITDA number as well did miss estimates. Margins compressed and profitability did miss, but by not that big a margin because there was a higher other income that we saw there. The reason for the top line miss is both, miss estimates. On the volume front, we were working with a number of closer around, 8.7 million tons, or it came in at around 8.4 million tons. So volume miss. That's despite having a provisional number. Realizations compressed by more than 45%. That's something the street was not prepared for. So that was a bit of a disappointment as well. And a miss on the top line, higher input costs, particularly employee costs. That's what hurt them on the margin front. The profit number, as I said, it was supported by higher other income. But otherwise, expect the stock to open up in the red today. Sonia, you're tracking a couple of tyre makers, though.
Yes. So there are two companies. There's Apollo Tyres and Balkrishna Industries. Now, for Apollo Tyres, I'm going with green because it's a beat on all parameters. And the numbers are looking very good. The earnings, the margins have gone up 40 basis points on a quarter-on-quarter basis, coming in at 12%. Even if you look at year-on-year, a revenue growth of over 17%, and EBITDA growth of 11.6%, the margins at maintained at 12%, and the profit after tax higher than what the street was estimating and higher than what they did last year. Now, if you look at the margin trend, right, after languishing in that 11% mark for 2 quarters, now the margins have picked up to 12%. And if you remember, peers like MRF had not done so well. In fact, they saw a margin slide. So within the entire basket, Apollo Tyres is the one that's standing tall. There's been a pickup sequentially in their Europe business as well. So I'm going with green over there. Now, the stock to watch on the downside this morning is definitely Balkrishna Industries, because not only were the earnings very weak for the company, where the revenues, they grew, but the EBITDA has seen a big fall. EBITDA is down by 20%, margins are down to just 16%, and the net profits have fallen as well. But the commentary from the management is what could spook the street. They say that Europe, which is the biggest market for them, is seeing strong headwinds right now. The current situation in Europe continues to be challenging, and that may have an effect on their performance in the second half of the year. And because of this, they've suspended guidance. So they've stopped giving guidance for FY23. So annual sales volumes is what they generally give out, but they've suspended that, and that I think will be a big red tick for the street.
And I think last quarter also it was a big disappointment, right?
Yes.
The stock had fallen quite a bit post those results. We'll see continuation there of disappointment. GMR is going to be in focus, so will CESC. Vivek is here to tell us why. Vivek.
Well, that's right. So GMR Airports Infra is a stock in focus. It's a seasonally weak quarter for the company. However, operationally, the losses have narrowed, so that's a little bit of a positive sign. When you're talking about the numbers, the net revenues, remember the company actually pays Delhi Airport revenue share to AAI, this Airports Authority of India. So revenues have jumped up almost 17% on the back of improvement as far as passenger traffic is concerned. Reported EBITDA is down almost 4.8%. Margins have declined almost 10%, so 42% versus 52%. And the loss has come in at close to 210 crores this time around. Well, the company is saying that they're expecting the air traffic to actually gain momentum with the addition of routes as well as addition of airline capacity. Some other highlights, the company continues its deleveraging, and also what they're saying is that the Goa airport is something that is expected to see an inauguration soon. When you're talking about the other stock on the radar is CESC. It's an operationally weak quarter. The distribution franchise is something that's not done very well. Also, revenues have jumped up almost 12% on a year-on-year basis. However, when you're talking about the core EBITDA, it's down almost 10%. Margins too are down significantly, 21.6% versus 27% on a year-on-year basis, and profitability is down almost 9%. Now, MK has gone ahead and cut their target price. They maintain a buy. However, what they're saying is that at this point of time, due to the softness of the distribution franchisee, they're actually keeping that as negligible at this point of time, and they've cut their FY23 and FY24 EPS by 6 to 7% to factor in the slowing momentum.
Okay, Vivek, thanks for that. Well, let's hop across to Sonal. Sonal, what about Aarti Industries? How are the numbers?
Well, they were weak this time around, both on a YY and on a quarter-on-quarter basis. And remember, this is just the specialty chemicals business. From 1st of July, they got the nod for demerger of their pharma business. Despite that, it was a weak set on the margin front. Revenues did grow by 34% and they grew 17% on a quarter-on-quarter basis as well. But it was a margin miss, came in at 15.8% versus 20.2%. Profits also were down 17%. They were down 10% on a sequential basis. The conference call is at 4:30, but for today, expect the stock to be in the red today.
Okay, expect the stock to be in the red. Aarti Industries. What about Radico Khaitan? Surbi is here to give us the latest on that. Surbi, over to you.
Radico's numbers are marginally below the estimates, even though their revenue saw a growth of 9% on a year-on-year basis at 760 crores. It was below the estimates of 800 odd crores. The gross profit margins have come in at 42% versus the estimates of 44%. The EBITDA is down nearly 20% at 90 odd crores, and it is mainly affected by higher selling and distribution expenses and higher employee expenses. With respect to their operational metrics, the premium segment has done much better. Their volumes are up 22% and the realizations are up 5% on a year-on-year basis. The regular segment, that's where the company has taken a hit, where the volumes are down 13% and the realizations are up only by 3% on a year-on-year basis. The management says that with the ongoing premiumization trend and the constant price increases, their profitability will be better in the coming quarters.
All right, thanks a lot, Surbi, for that. So here's a quick recap then. Stocks with positive news flow, there's ONGC, Biocon and Apollo Tyres. While stocks with negative news flow, there's Balkrishna Industries, IRCTC, NMDC, GMR Infra, CESC, Aarti Industries and Radico Khaitan. But crude has fallen, so that's a big positive and a tailwind for our own markets. Manisha Gupta is here to give us a roundup of all the action overnight. Manisha, hi, good morning.
Morning, Sonia. Thank you for that. Well, yes, the crude oil prices have slipped anywhere between 3 to 3.5% for both the varieties, and this is after OPEC trimmed the global oil demand growth forecast for this year and the next as well. They say that the global oil demand is on the weaker side and the oil supplies are surplus for the last couple of quarters, and this quarter perhaps could really follow suit. Also, high inflation, rise in COVID cases in China, the China GDP growing less than what the official target and the estimates were. All of that has weighed onto the crude oil prices. The markets will watch out for the U.S. inventory data for further cues here. But in the meanwhile, you have the metal prices, which have continued to do well. So nickel is trading at a 5-month high. Aluminum is at a 3-month high. Steel is trading at a 7-week highs as well. And copper just about holding those 5-month highs as well. So metal prices yet again holding firm.
All right. Manisha, thank you very much for that. So metals holding firm, oil helpfully is slightly lower. Cameron Brandt is Director of Research at EPFR Global. He tracks fund flows closely. Cameron, great to have you with us here. Thank you very much. Emerging market funds, global emerging market funds started to get money. We're starting to get money. Is that trend continuing? What is the latest data showing you? And which markets are seeing the most allocation?
So the short answer is yes. We've now had 3 straight weeks of inflows for the global emerging markets funds, which is definitely a positive for India. Those funds have increased their allocations to India pretty significantly over the past year and a half. China still remains their biggest allocation, but that's down from a high of close to 1/3 of the average portfolio to closer to 1/4. And the other market that is faring well as gem funds start to take in money is Brazil.
So what about India, Cameron? We are seeing a return of foreign flows into the Indian markets, especially in the month of November. How are you reading the data here, and what is the prognosis?
The prognosis is positive. We're seeing flows again into dedicated India equity funds and a little bit into India bond funds. And as I just said, that the gem funds are getting money is going to be good for India because they allocate a fairly decent slice of that to India and seem to be anxious to certainly nudge their exposure a bit higher. And as you mentioned in the run-up to my appearing too, anytime oil prices look like they're stabilizing or even going down, that's usually a positive for India, and it seems to be the case again.
Hi, morning, Cameron. Thanks so much for joining on the show. I just wanted to clarify that the money that's coming to India, it's not passive, but there is active funds that are coming in, right?
A mixture of both, but especially on the dedicated funds, that tends to be sort of more active money. And that's the one that I tend to read as positive FII sentiment.
Right. You said that on an average, portfolio level allocation to China is down from 33% to about 25% now. In between, there was a lot of talk that people were shunning China big time, and that all kinds of analysis were done in terms of how a lot of that money will be reallocated to other emerging markets, etc. That may be a trend very longer term, but are you seeing a little bit of pause in those kind of conversations, or is that still going on?
Well, pause is the right word, but that I would apply that to the reallocation. We saw definitely some unease, but for the most part, the money has continued to flow into China funds for a variety of reasons, which have actually shifted as we've gone along. But the one I'm hearing the most at the moment is the sense that at some point China will relax its COVID restrictions, and that will set up a really major bounce in Chinese equity markets that people are already positioning themselves to try and capture.
Okay, well, we will leave it at that. Thanks a lot for joining in, and have a great day. That's the word on the flow situation. Flows continue to come in thick and fast into the Indian markets. Well, let's slip into a quick break. On the other side, it's the last day of the earnings season. In fact, Dipan Mehta of Elixir Equities will be with us to discuss some of these stocks. We'll also connect with Sanjay Chaturvedi of IOL Chemicals to talk about their Q2 earnings. Stay tuned.
Welcome back. I hope you're having a good morning. Well, for starters, the SGX is suggesting that we're likely to pull back. Yesterday, we ended virtually at the low point of the day. The final tick was at the day's low, but today, we could pull back all of that. Up close to around 45 points is what the SGX Nifty suggests. Dipan Mehta, director at Elixir Equities, joins us. Hi, Dipan. Thanks so much for joining in. Well, Dipan, yesterday towards the end of trade, everyone was buzzing about this LTI Mindtree merger. You're going to have a conglomerate now far larger. There could be some benefits as well that will come out there. And possibly may not be in this review. That's the one that happens in February. But in the next review, it could possibly make its way into the Nifty, going by the current data. What's your take on these stocks?
Good morning, Nigel, and thanks for having me on your show. I think the best piece about both the companies is that they were clear outperformers versus their peer group. And consistently, they have been growing at rates about 15 to 20% thereabout. And I think that even the last quarter, when there were so many headwinds, they managed to sustain their growth rates, which is quite positive. And therefore, they were trading at premium valuations. The major issue with both companies was client concentration, especially Mindtree. And that's always the risk factor for a mid-cap company. I think with the merger taking place, one could expect the client concentration risk factors to be addressed. And if they continue to maintain industry-leading growth rates, I think investors certainly will like to go overweight on the combined entity. And as you said, if it finds its way into the various indices, MSCI, Nifty as well, then that much more money will come into these stocks from ETFs and other institutional investors. Generally very positive on the combined entity. And although there are going to be some challenges because of macroeconomic headwinds in US and Europe, but if you look beyond the next maybe 6 to 8 quarters, then these companies can be real fantastic value creators over the longer term, like a 3 to 5 year period.
Okay, well, Dipan, good morning. I wanted your thoughts on some of these stocks, that have reported very good numbers. The one that stands out this morning is Greaves Cotton. It's a revenue growth of 87%. And, that electric mobility business has reported the highest ever sales, the Ampere business for them at 33,000 units. I know this is a stock that you've watched in the past. I don't know if you track it currently, but your thoughts on how to approach it now?
Good morning, Sonia. I think we have discussed Greaves Cotton several times on this channel, and it's one of the stocks worth watching. There are very few stocks that you can actually buy if you want to play the EV investment theme. And Greaves Cotton certainly is one of them. And I'm surprised by the kind of growth numbers that they have reported, especially in a highly competitive environment. Mind you, there are at least 10, 12 EV players experimenting with products, and some of them have been funded by private equity. So they have deep pockets and can absorb losses for an extended period of time. But despite that, I think maybe they have a kind of a winner in place. And certainly this company needs to be tracked. I think underlying business also is good because overall economy has moved up and consuming industries also have done well. Valuations, I think, are still reasonable. And I think if they're able to sustain these kind of growths, especially if the EV business evolves pretty well, then you may see the stock getting re-rated. Do keep in mind that they have set up a massive capacity for EV, which can quickly be put to use depending upon the demand scenario and the success of their products.
You know, the moves have been so large on Reeves Cotton, but I just looked at a slightly longer term chart on Reeves. Prices are where they were back in late 2014, you know. So it's, but in between, of course, a lot has happened, so one cannot ignore that. Deepan, what do you make of all this news flow? I mean, from US tech companies, the latest, of course, is Amazon, 3% of workforce, 10,000 people. You heard from so many others before. What does it mean for IT services companies here, if anything at all? Does it darken the outlook?
I don't know. I heard from someone in the IT services industry that's positive for them and should lead to more and more offshoring, because all those jobs which they are lost over there, some of those functions can easily be offshore to Indian companies. So I don't know how these things will actually work out. And I mean, if you see the numbers of all the IT companies this quarter, what the industry has been consistently saying is that there are now more and more, the IT spends are non-discretionary. Larger portion is coming from companies which have to spend on these IT projects or maintenance, without which the businesses will not run. And maybe that's a new kind of a scenario for these companies as well. And I think that may even increase in terms of IT spending going forward as well. So I'm quite positive on software companies. And I said, I think once we have some stability globally and we are kind of have some kind of a end point as to when these recessionary and macroeconomic headwinds are going to end, and when the actual cycle of spending starts to revive, then these companies are very well placed to take full advantage of that. And as I said, I think offshoring is becoming more and more mainstream, and that certainly benefits Indian IT companies.
Okay, all right. Deepan, request you to hang on. We're going to be talking to a chemicals and pharma company. So IOL Chemicals, that's the one that posted a weakish set of numbers, actually. The revenues dipped on the quarter, led by weakness in the chemical sector. You also had margins that contracted on a year-on-year basis as well as sequentially. Mr. Sanjay Chaturvedi, the CEO of the company, joins us to fill us in about the past quarter and the way ahead as well. Good morning, Mr. Chaturvedi. Thanks so much for joining in. Well, it's been a bit of a rough quarter. But, you know, before we get to your numbers, I wanted to ask you about the ibuprofen prices. I'm looking at an international chart, and I believe prices have started moving up over there as well, particularly in the last 30 days. It's moved up to around $15 odd. Could you tell us if that is the case? Are you seeing some bit of an up move in prices? And why exactly is this happening, particularly in Europe? Are there some shutdowns?
No, there are no shutdowns. You know, you're absolutely right. There is a slight uptick in prices. But yeah, you know, the uptick is, it's too early to say that the prices are going up. It's very, very early days. But these prices have started to go up only in the last couple of weeks, and that wasn't the case in Q2. So you see, you know, our muted numbers, not only, you know, ibuprofen perhaps had a less of an impact. Most of our muted numbers were on account of the chemicals business. Right. And I'll talk more about that in a little bit.
Mr. Chaturvedi, if you could just give us a couple of numbers. What was the average price of ibuprofen in the past quarter? And if you could tell us, even if it's temporary, what is the current price of ibuprofen? Go ahead.
So in the export markets, the prices of ibuprofen continue to be, you know, $12 plus range, whereas, you know, in the domestic market, they are slightly lower, you know, anything maybe at $1 lower or so. But I think all of these are, you know, the pricing may be stable, but the demand that we saw is looking to come back now. And I believe that some of the changes that we've seen in this industry are temporary and not structural. In other words, you know, yes, the ibuprofen business, if you look at it a few years ago, was riding high and then it came down. And I think, you know, we are past the lowest cusp and it's on its way back up.
Okay, so you're saying the worst is over?
Yes.
All right, that's on ibuprofen. the chemical segment weakness is quite stark. I mean, the revenues have fallen double digits, almost 15%. There's an EBIT loss of 3 crores in the chemical business. Can you tell us what's the prognosis? Do you continue to see pressure there in the second half?
No, I think things are improving. We already, in the Q3, we have data for 1 month. But what happened in Q2 was our key raw material, acetic acid, is imported. And because it's an imported product, the import prices and the volumes are done, several weeks and months in advance. And sometime during Q2, what happened was that globally the prices of acetic acid contracted dramatically. So what that did for us as an organization was there was a period of time when we were stuck with high cost inventory of acetic acid. And that's really what created, this problem for us in Q2. All that inventory has been cleared out. And going forward, we see the chemicals business back to profitability again in Q3 and Q4.
So you're saying in Q3 and Q4, chemical business will return back to profitability, right?
Yes.
Okay, just one more question from my end. What are the new product launches that you're looking at? The reason I ask is because is there any scope for you to de-risk the revenues, and what percentage will come in from new molecules?
So if you look at, I think you are specifically referring to the pharmaceutical business. Yes. And there, when I look at ibuprofen versus the other APIs, the other APIs are already, 40% or so in that range, 35 to 40% of the revenue. And if you compare this to, maybe a few years ago, where ibuprofen was the dominant part of our business and contributed, perhaps 90% plus, so by that yardstick, I would actually argue that the business is already de-risked. Okay. But going forward, I would say within the next couple of quarters, we do expect that the non-ibuprofen business will be, greater than 40%, and maybe within a year and a half, the non-ibuprofen portfolio will be 50% of the total pharma portfolio.
Okay.
So clearly, we are on that path of de-risking. And you talked about, what are the other products that we offer. Yes. In addition to ibuprofen. Products like metformin, clopidogrel, paracetamol, yes. Pantoprazole, levetiracetam, fenofibrate, yes. Lamotrigine. These are some of the products. And I want to add that, the structural shift that I'm talking about is that the demand is recovering. I mean, if I just take the case of metformin, metformin is a growing product.
Mr. Chaturvedi, we've got a broad gist out there. You're looking at de-risking the business. Very quickly, before we let you go, we're a little tight on time. Margins, you were guiding for mid-teen margins earlier on a consolidated yes. basis. Now, that's not happened in the past quarter. So my question to you yes. is, will margins move back to mid-teens? You could give us a range on the margin front. And by the end of this year, what kind of a growth are we looking at in comparison to the past year? That's FY22. Very quickly.
Okay. So margins, we expect, that by the time the year closes, we should be back into double digits. Whether they will be in mid-teens, we are certainly targeting that. They will be back into the double-digit range. And in terms of growth, it will be, a single-digit growth versus last year. And that's really not on account of the price correction that we've had in ethyl acetate. So volumes are, more or less flat, but the price correction is more than, 10-15%. And that has really what is impacting our growth. So what will happen is you will see a greater shift of the business coming into the pharma side this year than in the previous years.
All right. So we'll leave it there. Thank you so much for joining us with a lot of that detail. Very helpful. So both pharma and chemicals business may be slowly improving at the margin from here on. Well, let's come back to the market, and we have a very special voice joining us on the phone line. Ramesh Damani is member of Bombay Stock Exchange. A lot of you would have watched that show yesterday, which my colleague Nimesh and Sonia hosted. Mr. Damani, welcome back. Good morning. Great to have you with us here. Absolutely a lovely program. And congratulations to you for a wonderful, lovely family, your son, your grandkids. I mean, it was quite something.
Yeah, Prashant, thank you so much. It was a really wonderful and sweet moment for me, which Nimesh and Sonia created. Thank you so much. I really enjoyed myself yesterday. And my grandkids were over the moon. So it was a lovely moment. Thank you.
We all saw that, and it was wonderful. Mr. Damani, you know, yesterday, one thing which we kind of, I guess, did not kind of quiz you about was markets itself, Mr. Damani. There's so much happening, right, with in the US especially, and a lot of it sort of falling our way as well. What is your sense? Are we past the worst in terms of sentiment and in terms of inflation numbers, etc.? How should we look at market trajectory from here?
Great question, Prashant. I think we're within a few percentage points of an all-time high, and I think we should be able to claw back to that level for sure. Having said that, I think India is in perhaps in a different position than it used to be a few years back. That when global markets got cold, we used to get the flu. I think we're no longer doing that because of various reasons, domestic liquidity or whatever. So I feel that this is a good time as any to invest. And instead of talking about, well, the Queen recently celebrated a platinum jubilee before she died. And I think it's time to talk about those kind of numbers in the sensex too, that we'll get to a platinum jubilee level type of number. So I think I remain bullish. Undertone remains extraordinarily strong according to me.
Okay, undertone remains so strong. Ramesh, hi, good morning once again. Yeah, the emotions were running high yesterday, right, with the family and the grandkids. Yes. It was a great moment. But we were also talking about certain sectors and pockets. And I remember you mentioning the defense PSUs, rail PSUs. You talked about those stocks even during the Diwali session that we had, Muhurat session. But the question I was asking you then, and it portends even now, is when is the time to exit? Because these trades tend to be a little shorter than usual. I mean, they don't last very long. So what's the advice there?
Yeah, a great question, Sonia. You know, the defense stocks have had a great run-up. You know, some of the rail stocks have had a good run-up since we discussed them. So I trimmed my positions, added to the cheaper ones, sold the more expensive one. And we discussed a couple of stocks yesterday in context to what you're saying, you know, which have been long-term compounders in my portfolio. And, you know, I think they will continue to do well. I mean, I explained, you know, stocks, the PSU stocks, whom people deride have compounded over a 20-year period from market caps of few hundred crores to almost 60,000 crores. But as always, I mentioned, Sonia, I must mention that again, that what ideas I discuss are purely for educational purposes and for discussion purposes. I do not recommend any stocks, clearly. Having said that, I will say that if you are a value investor, you are over to yourself to look at some of these stocks because some of them, even today, are trading at, you know, single-digit multiples and almost 5 to 6% dividend yield. So there's a very good picking there. And since the market now has gravitated towards those kind of stocks, I think there could be a good upside in some of them.
Good morning, Mr. Damani. Always good speaking to you. Well, the PSU theme is something that you've been talking about. But what about these new age companies? You know, last November it belonged to them. Everyone was talking about them. You know, sky high valuations, logical, illogical. The market gave that answer. But now there's plenty of supply that's available if you're interested. Do any of those businesses excite you?
You know, the businesses excite me, Nigel. Thank you so much. But I think the valuation still is not in my comfort zone. We might have some exposure to some of the new age companies. But broadly speaking, I think I would be more comfortable after even a further correction. I think the bloom, as you call it, these stocks is off the picture now. And, you know, they will settle at, you know, more attractive levels. I would not dismiss all of them. I think some of these businesses, the food delivery business, the e-commerce business, are very attractive businesses. And long-term, they create a lot of value. But I don't think they're at the price point yet where investors should be betting aggressively on them.
Mr. Damani, you know, the season, the next season of Wizards is coming up. And who are you most excited to speak with and sort of get insights from? It's always a cracker of a session, cracker of a season. And this one is a new one. Which are the conversations you're most looking forward to?
Yeah, Prashant, thank you. It's always such a privilege to use public airways to talk to people whom I've admired and I've looked up to. You know, historically, of course, talking to Rakesh was always a brilliant. He's so colorful, as you all know, and so sharp in his opinions that it's always a pleasure to interview him. Unfortunately, he's no longer there. So what we're going to do, Prashant, is host a special tribute to him with an all-star cast, basically, for the first 2 episodes. He was my first wizard. And hopefully he will get a proper tribute. The one I'm really excited about this year is we've got the head of Carlyle Group, David Rubenstein, who's agreed to come on a show. So sometime in January, we will be airing that show. You know, David Rubenstein has interviewed everyone who matters in the world, has made so much money, head of private equity, Duke University. So it'll be an extraordinary opportunity to reach out to him and understand what he thought of interviewing the different wizards globally and also what he thought of his own career. So I'm really excited about that.
Okay, there's Laura Geritz as well. Lots to talk about over there. And of course, the first episode drops on the 21st of November. So all of you viewers, do stay tuned in and keep your eyes peeled. Ramesh, pleasure speaking with you. Thanks a lot for joining in and have a great day.
Thank you, Sonia. Thank you so much. Thank you, guys.
Okay, well, that's Wizards of the Street. That's the all-new season that debuts on the 21st of November. Let's do one thing. Let us move on now because we have plenty of stocks to talk about. So we'll take a quick break. On the other side of the break, we will have our technical experts, Sudarshan Sukhani and Nitesh Thakkar, joining in for some stock talk.
Your health is our concern. Choose network or appropriate hospital. Our telemedicine and customer care team are available to guide you. Star Health Insurance, always at your doorstep.
Presenting the next challenge between two animals.
Who seems faster amongst the two? Then why place all your bets on the elephant? Similarly in investments, horses are like smaller companies. Even with ups and downs in the journey, they can run faster than the elephant like big companies and show higher potential. Along with investing in the horse, what if you also get tax savings? That's right. Introducing Samco ELSS Tax Saver Fund that aims to create wealth for you by investing in high-quality small and mid-sized Indian companies and also helps you save tax with ELSS. Invest today. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
इस सुपरफास्ट जमाने में कार इंश्योरेंस क्लेम का स्ट्रेस क्यों? Acco ऐप पे क्लेम सेटलमेंट सुपर फास्ट होता है.
Get super fast claim settlement. Acco, welcome change.
Welcome back to Bazaar Morning Call. Well, let's get in our technical experts as promised. Nitesh Thakkar is standing by and Sudarshan as well has joined in. Good morning, gentlemen. Thanks so much for joining in. Well, Mitesh, you go first today. Tell us what's your trade on the index, on the Nifty?
Morning, Nigel. Yesterday was a very quiet session. But day before that, which was Friday, on the trading day, we had a big gap up. So I think yesterday was nothing but more of sideways consolidation, subduedness. I still believe that the idea should be to remain and trade on the long side. If you get an intraday dip, like we got yesterday, would be a welcome buying opportunity. And looking at targets of 18,477, 18,520 zones to be tested. I think eventually we will head towards 18,900, 19,000. So maintain an extremely bullish bias in the medium term. But in the short term also, I think with today, mild gap up, I would be wanting to take a long trade with yesterday's high or just 10 points below that as the stop loss.
Okay, Sudarshan Sukhani is also with us. Sudarshan, what are your thoughts? It's just a smidge away from all-time highs. Do you continue to stay long? Do you get a bit cautious here? What's the approach on the index?
Good morning. See, Sonia, you should always be cautious on the market. So that's a very generic statement. So you must be cautious. But the key point is that you must also be long. If yesterday I had suggested there is a 100-point dip, go long. That was a dip, buy on dips market yesterday. There was a 100-point dip towards the end of the day. And today, there is no need to wait for a dip. I think that dip at the minor correction is behind us. We should have a decent day today and maybe tomorrow morning also. So go long at the open, keep a 100-point stop. And that applies to the Bank Nifty also. For both indices, you must be long today. And tomorrow we'll see what happens. So for the short-term trader, the trend is still up.
All right, gentlemen, good morning. Sudarshan, so with that view, individual stocks you'd want to put trades on?
Yes, good morning, Prashant. See, the indices cover most of the large caps. And there are so many opportunities in large caps, but I think it's also sometimes a repetition. You're already buying them when you're buying the Nifty. ACC is a buying opportunity. So we go a little lower than the large caps. It's a buy with a stop under 2350. DLF is making a wonderful long-term chart. So while it's an investing idea, for the day also, it's a buy, the stop under 395. I have one intraday short. It's a repetition, Jubilant Food. It's a very miserable, a very dismal chart. An intraday short is available with a stop on above 570. And finally, L&T Finance is a buy. That stock has been in a mini bear market of its own. That bear market is now ending. So again, it's an investing idea, and today's trade with a stop under 81.
Mitesh, how about you? What would your stock ideas be?
I also have more of buy calls today. One sell call is there. So on the buying side is Britannia, after a big breakout post the numbers, which has been consolidating. Now should see follow through. So buy with a stop at 40.50 for targets of 42.25 to begin with. Birla stock is a buy with a stop at 278 for targets of 300, and Exide is a buy with a stop below 175 for targets of 190. On the sell side is Eicher Motors. Looks like a medium-term kind of a pullback starting over here. It's had a very good rally. Now a pullback could happen and see the stock price decline to about 34.20, 34.15 levels. So that's a short-term sell with the stop at 35.66.
Okay, all right. Thanks, Mitesh, for that. Well, that's on Eicher Motors. Big up move over there. Dipan, I don't know if you had a chance to hear the management of IOL Chemicals. I know you do track that stock. Any thoughts there?
Yeah, Sonia, see, it's a cyclical business, and that's something you have to live with, which is why it's available at attractive valuations. But the wicket they are playing on is excellent for the company, and this China Plus One strategy and increased sourcing of pharmaceutical APIs and chemical products from India is a great investment trend. I think that you are buying the stock at perhaps the bottom cycle as far as the earnings are concerned. And even there, it's available at about 11 times trading 12 months or so, which is quite attractive. It's a solid management and as such, a decent track record. So I'm positively inclined towards the stock. Just you need to ride out the volatility in earnings, and that can be easier said than done, actually.
Dipan, sort of throwing a few names your way. These were large movers yesterday. InfoEdge, on the back of earnings, saw a very large move. LIC came alive a little bit, not too much. You had Fortis, which is back above 300 rupee levels. And Godfrey Phillips, I think, has taken a price increase. And the stock's done very well last 3 or 4 days. Any of these names ring a bell? Naukri, there is LIC, Fortis, and Godfrey.
See, you can talk about LIC, I think, exceptional set of numbers, and a bit surprised at what they reported. Much needed to improve the sentiment in the stock, considering the kind of value they've destroyed post-listing. Let's hope the management's able to build on this thing. And more importantly, the disclosure standards need to improve in terms of what the enterprise value is and going forward, what the strategies are to increase it. So in any case, I think stock markets also are looking up. So that's very positive for LIC per se. And it's available at very, very attractive valuation. So you could easily see a maybe 15-20% rally in LIC if the consistency in earnings is maintained over the next 6 to 12 months or so. We are generally very positive on the hospital space. Across the board, I think numbers have come through which are exceptional for the industry as a whole. And Fortis, of course, I think is a key player. And they have got some excellent properties when it comes to hospitals in key locations, and a good, I would say, plan to expand the brownfield capacity and decent return on investments and utilization levels as well. So although slightly on the expensive side, but this could be a consistent performer. So I'd go with these two companies. When it comes to InfoEdge, it's a hodgepodge of many things. And I think, it's difficult to get a handle on where the stock price will be 6 to 12 months down the line. There's Zomato over there, and there are the new kind of equity investments which they have taken. And although the core business continues to do well, I think all of these kind of other investments are what add value to the company, and that's very difficult to project and forecast. And Godfrey Phillips, I think we are generally nil or negative on tobacco, so I would give it a pass.
Okay, all right. You'd want to stay on, Dipan, because we have the management of Greaves Cotton joining in on the other side, and that's a stock that you've tracked for a while. Nagesh Basavanhalli, the Executive Vice Chairman of Greaves Cotton, will be joining in. Super earnings this time around. Stay tuned for more.